Farber from Lepic Kreger Realtors in Iowa City, Iowa. Welcome to Lunch with a Lender. I'm here with Eric Baumgarth from the University of Iowa Community Credit Union, and we are not only eating french fries and burgers, but we're talking about bridge loans. Today I am meeting with a lender, Eric Baumgarth of the University of Iowa Community Credit Union, and we are going to discuss the elusive bridge loan. Hey Eric.
Hey Emily.
Let's talk about bridge loans. Can you explain why a buyer might want to use a bridge loan in today's market?
Absolutely. Let's say you've got your existing home and you've got equity built up in your existing home, and you need to use that as the down payment on the new property. That's where a bridge loan comes into play. We're going to use like a short-term home equity product to kind of pull out that equity on your existing property and use that as down payment before you have it sold.
And that's vital in today's market because when you're in a strong seller's market, homes are selling so quickly that a seller may not be interested in your offer if it is contingent upon you selling your house. So Eric, who might qualify for a bridge loan?
Good question. What we look at is, technically speaking, a few months after you purchase the new home, you're going to end up with 2 house payments as a worst case scenario. Oh, that's the next question, right? Yeah. Anyway, so what we have to look at is we have to look at your overall debt ratios, your income to your monthly debts, and we have to support that with both house payments into the equation. So essentially we're just going to look at it with both house payments as a worst case scenario, and if you still qualify, then we would love to help out with a bridge loan.
So we just touched on it briefly, but what are some of the risks and what are some of the benefits of the bridge loan?
So on one hand, a bridge loan can be pretty simple. If you already have an accepted offer on your current home, then we can see when the finish line is going to kick into play. So you may not end up with actually having 2 house payments. If you don't have an accepted offer by the time we close on the new home, your first payment on that new property is going to be that second month away. So if you haven't sold your existing property by that time, you're going to end up with 2 house payments.
Nobody wants that to happen, and that's why you need to hire a real estate agent who's going to work hard for you and have your home priced realistically in order to get it sold. So can you tell us, what is the cost of getting a bridge loan?
Great question. So we work with our retail partners here at the University of Iowa Community Credit Union to do that bridge loan or home equity loan. And they just need to do a lien search and record that mortgage. So essentially your costs are going to be $300 or less typically. And then from there, you're only going to pay interest on that bridge loan until it's paid off. So it could be 30 days of interest, could be 60 or 90 days. It just depends on how long that bridge loan lasts.
What do those interest rates look like?
Right now, it's pretty much tied to our home equity interest rates. So those are going to be monthly promotions that are set out. So anywhere from low 4s on an interest-only basis, or we can actually stretch that bridge loan payment over 30 years if you'd like. That rate's going to be a little bit higher.
All right, thanks Eric. If you have any more questions about bridge loans, I'm sure Eric at the University of Iowa Community Credit Union would be happy to tell you more about it. And we just want to thank you for joining us today. As always, I put out videos every Friday, if not more often. If you haven't done so, please subscribe to my channel and hit that bell icon down below. When you hit that bell, then you will get a notification every time I put out an awesome new video. All right, catch you next time.
Thank you.
Okay, so set yourself up, adjust your clothes. We're cutting all this out, right?
Sure. That we can use here.